everybody. Welcome to Monday Morning Must Knows. My name is Merlin Rothfeld, and here are 3 things to pay attention to for the upcoming trading week. Now, of course, before we dive into that, we have to talk about last week. Holy shnikes, what an amazing week. You had 5 updates pretty much for all the major market indexes. You had CPI numbers and PPI numbers showing inflation's declining aggressively. That was euphoric. All of a sudden, markets started ripping to the upside. You had Ripple settle a landmark case with the SEC. Ripple actually winning most of that. There was kind of a split victory there, but huge moves up for cryptocurrency. And then we had some major earnings announcements. You had JP Morgan, you had Citibank, you had BlackRock, Wells Fargo, all beating earnings. Now, some of them were down on the Friday, but at least good start to earnings season, and that's where we will start off our Monday Morning Must Knows, is talking about earnings season. Now, there's not a lot of names out there this week. There are 296 companies reporting. Monday, you've got nothing. Tuesday, you have Bank of America, Morgan Stanley, Synchrony Financial, Charles Schwab, PNC Financial, Lockheed Martin, and JBHT Transportation. On Wednesday, you've got Netflix, Tesla, IBM, Goldman Sachs, Alcoa, United Airlines, and Halliburton. Wednesday, really the biggest day with Netflix and Tesla, the behemoths out there in that NASDAQ index. And on Thursday, Johnson & Johnson, Intuitive Surgical, American Airlines, CSX, Philip Morris, and Freeport-McMoRan. And we're not done yet. Friday brings you Schlumberger, American Express, and Huntington Bank shares. Now, all those companies in green are financial firms, which continues this deluge of banks and financial companies reporting earnings. So pretty exciting stuff. And if they do follow a tone with what happened on Friday's session with JP Morgan, Citibank, BlackRock, and Wells Fargo, we could see a pretty good week. Although the bar was set pretty high with those earnings announcements. Now, let's shift to something that normally isn't that significant, but it is starting to become much more relevant, at least for me and I think for economists, with regards to gross domestic product. And that is manufacturing. I know we don't spend a lot of time here because manufacturing in the United States isn't the backbone of it, but manufacturing in the United States represents, let's do a trivia question, just off the top of your head, those watching the video right now, what percentage of GDP of the United States comes from manufacturing? Tick tock, tick tock. The answer is 11%, right around 11%. So it may not be the juggernaut that pushes GDP higher or lower, but it certainly has an impact on it. And this week we've got a couple of pretty good announcements there with your manufacturing data. We start things off on Monday with the Empire State Manufacturing Index. That's at 8:30 a.m. Eastern Time. So that will be 1 hour before the markets open, so that'll be factored in. We also have on Thursday the Philly Fed Manufacturing Index at 8:30 a.m. Eastern Time as well. Now, the reason I find this one so interesting, again, is the amount of impact it has on GDP. So where do we stand currently with manufacturing in the United States? Well, let's take a look at a graph here, which I think is very telling. This is put together by the Bureau of Economic Analysis. And you notice these are the components that make up gross domestic product. Really, what are we producing in the United States? You can see number 1 up there, healthcare and social assistance. That's number 1. Thank you, government, for that. Retail trade. Those are your big movers that have pushed GDP up to that 2% mark. But notice down here at the bottom, we have a little red box that's going to pop up. You've got a few sectors that are actually pulling this GDP number down. You have management of companies and enterprises, utilities, wholesale trade, non-durable goods manufacturing, durable goods manufacturing, and finance and insurance. Now, the finance and insurance one we understand because major banking crisis over the past 6 months or so that's understandable. But look at this, manufacturing, those 2 numbers right there are having a significant pull down on GDP. So if we start to see these numbers for manufacturing show a little bit of hope, a glimmer of hope, and start to look more positive, then GDP might really start to increase, therefore giving the Fed more license to stop raising rates, hold them where they're at, and if it does continue to rise with GDP, we may even see them start to lower here in the near future because inflation is declining rapidly, unemployment is staying historically low. To get that GDP number to start to climb, no need to be raising rates, we might even start to cut. So it could be a very interesting change coming up here in the next few months with regards to our broad market, but keep your eye on those manufacturing numbers on Monday and on Thursday. And finally, probably the lightest piece of news for the week, that's going to be retail sales numbers. Now, retail sales, generally around the holiday season into January, we want to keep an eye on those because that's when the big shopping sprees happen. But it is important to see where we stand with regards to historical norms on retail sales because, of course, more spending means more GDP, more consumption, prices move up, markets do great. Less spending, things start to contract. So the chart here shows you that retail sales for the US have been rather flat. What I want you to do is look to the left of your screen here and notice that back in 2016, 17, 18, and 19, retail sales was always fairly flat. It didn't have huge fluctuations like we see in the middle of your screen there on 2020 during the COVID pandemic. We had wild swings in consumption. That's not normal. The question is, are we getting back to normal? So put a little red box over here on the hard red edge at 0.3%. That's what we were at the most recent reading for retail sales. The expectations are that this meeting, we're going to come out at 0.5. So on Tuesday at 8:30 a.m. Eastern Time. If we get anything above 0.5, I think that could be very optimistic for our markets, and you might see some market surge. Anything below that might bring in a little bit more pessimism into the markets and steer it down from that Tuesday point. Now, it's important to know that this is all just a hypothesis. Anything can happen, and we know these markets are very, very volatile. What is important is to know the times that these reports are released, because that's when the major influx of volume, excitement, fear, greed, panic will show up on the price charts. Now, the good news is Tuesday at 8:30 a.m. Eastern Time, that's before the market opens. So by the time the opening bell rings, retail sales will already be priced in, but it should bring in a good degree of volatility into the marketplace on your Tuesday session. So we got a lot of exciting stuff for this week. Earnings calendar is really what's on deck. That, my friends, is your Monday Morning Must-Knows. We'll see you next week.